President Biden wants to double the capital gains tax. This is bad news not only for investors, but also anyone who wants to enjoy a higher standard of living. Hello, I'm Steve Forbes, and this is What's Ahead, where you get the insights you need to better navigate these turbulent times. The Biden administration's idea to double the capital gains tax to a level not seen in over 100 years would be a disaster. Many people think that only the very rich would be affected. Actually, it would hurt everyone. It would be especially damaging to those who today have very little but want the opportunity, as Abraham Lincoln put it, to improve their lot in life. That is, the millions of people who would like the chance to gain more skills and earn more money for themselves and their families. Now, here's why the Biden tax idea is toxic. For an economy to grow, it takes investment. That is, people investing to start businesses or to expand or improve existing businesses. Productivity, that is, getting more by using less resources, comes from producers making investments. Without that kind of investing, an economy stagnates. Investment is risky. Most startups fail within a few years of inception. Headlines are made when somebody gets very rich with a new business, but unreported are the countless number of new businesses that don't make it. If government severely taxes those rare successes, guess what? Those investments won't be made, or they'll shrink in number. It's not only small enterprises that are vulnerable. Over half of the 500 largest companies at the turn of this century, a little over 20 years ago, don't exist today. The White House claims doubling the capital gains levy will reap hundreds of billions of dollars in new revenue. But every time in history that tax has been raised, government revenues have gone down. Why? Because people hold on to existing assets instead of realizing gains and redeploying the money into new opportunities. That means fewer startups, fewer expansions of existing businesses, and less money to pay workers. That harms everyone. By contrast, when the capital gains tax was cut, government revenues went up. That's what happened when Democratic President Bill Clinton slashed the rate in the 1990s. Federal collections soared. A sky-high capital gains levy would also depress stock prices, thereby hurting retirement funds. Now here's another downer of the Biden tax. Our new high rate would send risk capital to Europe and to Asia, where the average capital gains tax would be less than half of the Biden version. I'm Steve Forbes. Thanks for listening. Do send in your comments and suggestions. I look forward to being with you soon again.